Question 1. Which of the following is a key consideration when determining the premium for a cyber insurance policy? A. The policyholder's marketing budget. B. The level of risk management measures in place. C. The company's number of employees. D. The business's social media presence. Answer. B. The level of risk management measures in place. Explanation. The premium for a cyber insurance policy is largely influenced by the risk level of the insured entity. The level of risk management measures such as firewalls, encryption, and employee cybersecurity training is a significant factor in assessing this risk. The insurer will evaluate the policyholder's existing cybersecurity posture to determine the likelihood of a cyber attack or data breach occurring. Insured entities with stronger risk management practices typically receive lower premiums because they pose less risk to the insurer. The other options, marketing budget, number of employees, and social media presence, do not directly influence premium pricing in cyber insurance. Question 2. Mr. Garcia is the CEO of a healthcare company that stores sensitive patient data. His company recently experienced a data breach where unauthorized individuals accessed personal health records. Mr. Garcia is considering filing a cyber insurance claim. Which of the following steps should he take first according to standard procedures in filing a cyber insurance claim? A. Immediately notify the media and public about the breach. B. Hire a public relations firm to handle communication with customers. C. Report the incident to the insurance company and initiate the claims process. D. Wait for external auditors to complete an investigation before doing anything. Answer. C. Report the incident to the insurance company and initiate the claims process. Explanation. When a cyber incident occurs, the first step in the claims process is to notify the insurance company. This allows the insurer to initiate the claims process, begin evaluating the losses, and potentially deploy incident response teams or forensic experts to investigate the breach. In the case of healthcare data breaches, Mr. Garcia must also consider compliance with breach notification laws such as HIPAA, which require timely reporting. Although public relations and media handling are important, they should follow the notification to the insurance company and proper internal investigations. Waiting for external auditors could delay the critical steps needed to mitigate the breach's impact. Question 3. Which of the following would most likely be excluded from a standard cyber insurance policy? A. Coverage for ransomware attacks. B. Liability for a third-party data breach. C. Coverage for losses resulting from an act of war or terrorism. D. Coverage for business interruption caused by a cyber attack. Answer. C. Coverage for losses resulting from an act of war or terrorism. Explanation. Most standard cyber insurance policies include exclusions related to losses caused by war, terrorism, or acts of foreign governments. This is due to the unpredictable and potentially catastrophic nature of such events. As a result, insurers often exclude coverage for damages caused by these situations. Ransomware attacks, third-party data breaches, and business interruptions caused by cyber attacks are generally covered under cyber insurance policies, provided the policyholder has the appropriate coverage options in place. This distinction is important for businesses to understand, as they need to ensure they have the right coverage in place to address specific cyber risks. Question 4. Which of the following is the primary responsibility of an insurance adjuster in the context of a cyber insurance claim? A. Determining the total amount of the cyber attack's financial loss based on a third-party investigation. B. Deciding whether to approve or deny claims based on the policyholder's loss history. C. Evaluating the cause of the cyber incident and coordinating with legal experts and forensic investigators. D. Ensuring the insurance premium is paid on time by the policyholder. Answer. C. Evaluating the cause of the cyber incident and coordinating with legal experts and forensic investigators. Explanation. An insurance adjuster's role in a cyber insurance claim is to investigate the cause of the cyber incident and determine the extent of the damage. This involves coordinating with forensic investigators who identify the technical cause of the breach or attack and legal experts to understand potential regulatory compliance issues or third-party liabilities. While adjusters play a key role in claims evaluation, they do not directly decide on claim approval based on loss history or handle premium payments. Their main focus is on ensuring that the incident is thoroughly evaluated to determine whether the claim meets the terms of the policy. Question 5. Which of the following is a critical component of a robust incident response plan in the context of a cyber attack? A. Launching a public relations campaign immediately after the breach. B. Ensuring multi-factor authentication (MFA) is active on all company devices. C. Ensuring the company's cybersecurity insurance premiums are up to date. D. Regularly backing up critical data to minimize data loss. Answer: D. Regularly backing up critical data to minimize data loss. Explanation: a well-prepared incident response plan for cyber attacks includes strategies that mitigate damage and ensure business continuity. Regularly backing up critical data is essential to minimize data loss during a breach or ransomware attack, ensuring that the company can recover essential information quickly. While MFA, public relations campaigns, and up-to-date insurance premiums are important, they do not directly address the immediate steps in responding to a cyber attack. Data backup ensures that even in the worst-case scenario, the organization can restore its systems with minimal impact. Question 6. Which of the following best describes a third-party liability coverage in a cyber insurance policy? A. Protection for the policyholder's business interruption costs due to cyber attacks. B. Protection against legal liability for data breaches involving third-party data. C. Coverage for the costs of restoring the policyholder's own data after a cyber incident. D. Protection for a policyholder's reputation damage due to negative press coverage. Answer: B. Protection against legal liability for data breaches involving third-party data. Explanation: third-party liability coverage in a cyber insurance policy specifically covers the policyholder's legal liability if a third party's data is compromised as a result of a breach in the policyholder's system. This includes defending against lawsuits, paying legal fees, and covering any settlements or judgments that arise from the breach. While business interruption, data restoration, and reputation damage coverage are all important aspects of a cyber insurance policy, they fall under different coverage areas. Third-party liability is designed to protect the policyholder from the financial consequences of compromising data that belongs to others, such as customers or clients. Question 7. Which of the following is typically not covered under first-party cyber insurance? A. Forensic investigation costs to determine the cause of a data breach. B. Legal defense costs associated with defending a cyber lawsuit. C. Costs associated with business interruption caused by a cyber attack. D. Costs related to notifying affected individuals about a data breach. Answer: B. Legal defense costs associated with defending a cyber lawsuit. Explanation: first-party cyber insurance typically covers costs directly incurred by the policyholder, such as forensic investigation costs, business interruption, and notification costs to affected individuals. However, legal defense costs for defending against a third-party lawsuit are generally covered under third-party cyber insurance. First-party coverage focuses on the policyholder's direct losses, whereas third-party coverage addresses external liabilities, such as those arising from lawsuits or regulatory penalties due to the breach. Question 8. Which of the following would be the most appropriate risk management measure to reduce exposure to social engineering attacks in an organization? A. Implementing multi-factor authentication (MFA) on company accounts. B. Conducting regular employee training on identifying phishing attempts. C. Installing an advanced firewall system to block external threats. D. Encrypting all company data to prevent unauthorized access. Answer: B. Conducting regular employee training on identifying phishing attempts. Explanation: social engineering attacks, such as phishing, rely on manipulating individuals to divulge sensitive information or perform harmful actions. The most effective measure to combat these attacks is employee training, which helps individuals recognize common tactics used by cyber criminals, such as fraudulent emails or phone calls. While MFA, firewalls, and encryption are crucial for broader cybersecurity, these measures do not directly address the human element of social engineering. Regular employee education ensures that personnel are aware of the risks and can act to prevent these types of attacks. Question 9. Which of the following cyber risks would most likely require additional coverage under a cyber insurance policy? A. A phishing email targeting the company's CEO. B. A distributed denial of service (DDoS) attack that disrupts website access. C. A data breach involving unencrypted customer payment information. D. A network outage caused by an employee error. Answer: C. A data breach involving unencrypted customer payment information. Explanation: a data breach involving unencrypted customer payment information is a significant risk that would typically require specialized coverage under a cyber insurance policy. The breach could result in both financial losses, e. G. Credit card fraud and regulatory penalties, especially if the company is subject to privacy laws like GDPR or PCI DSS. While phishing, DDoS attacks, and network outages are critical cyber risks, a breach involving sensitive, unencrypted customer data raises both financial and reputational issues that often demand specific coverage for data breach costs and regulatory fines. Question 10. Which of the following is a key challenge in underwriting cyber insurance policies? A. Assessing the physical assets of the insured company. B. Accurately quantifying the potential exposure to cyber risks. C. Determining the company's history of employee injuries. D. Evaluating the policyholder's previous physical security breaches. Answer. B. Accurately quantifying the potential exposure to cyber risks. Explanation. Underwriting cyber insurance policies presents unique challenges as it is often difficult to accurately quantify the potential exposure to cyber risks. This is due to the ever-evolving nature of cyber threats such as ransomware, phishing, and data breaches. Insurers must assess factors like the company's cybersecurity posture, historical data, and risk management practices, but predicting the financial impact of a cyber event is far less predictable than physical property damage. Unlike traditional insurance, where asset valuation is straightforward, cyber risk assessment requires considering evolving threats and vulnerabilities, making accurate underwriting particularly challenging. Question 11. Which of the following cyber insurance policy coverages would typically include the cost of hiring a public relations firm to manage reputational damage? A. Cyber extortion coverage. B. Network security liability coverage. C. Data breach response coverage. D. Business interruption coverage. Answer. C. Data breach response coverage. Explanation. Data breach response coverage typically includes costs associated with managing the aftermath of a cyber attack, including reputational damage. Hiring a public relations firm to handle the fallout, communicate with stakeholders, and maintain the company's public image is a common component of this coverage, while cyber extortion, network security liability, and business interruption cover different aspects of a cyber attack. Only data breach response specifically addresses the immediate response and mitigation of reputational damage. Question 12. Which of the following types of cyber threats would most likely be covered under a cyber insurance policy's cyber extortion coverage? A ransomware attack encrypting company data and demanding payment for decryption. B. A security breach exposing customer data to unauthorized users. C. A denial of service DOS attack disrupting access to the company's website. D. A phishing attack targeting employees to steal login credentials. Answer A. A ransomware attack encrypting company data and demanding payment for decryption. Explanation. Cyber extortion coverage is designed to protect a business against cyber criminals who use extortion methods such as ransomware. In this case, the attack involves encrypting data and demanding a ransom payment for decryption. This coverage typically includes both the ransom payment, if legally allowed, and any associated costs like hiring a cybersecurity expert to negotiate or pay the ransom. Other types of cyber threats like data breaches, DOS attacks, and phishing typically fall under different coverage areas, such as network security liability or data breach response. Question 13. In the context of cyber insurance, which of the following is a common exclusion in most policies? A. Costs for restoring lost or corrupted data. B. Losses resulting from unpatched software vulnerabilities. C. Coverage for cybercrime committed by employees. D. Losses caused by natural disasters. Answer. B. Losses resulting from unpatched software vulnerabilities. Explanation. Most cyber insurance policies include exclusions for losses caused by unpatched software vulnerabilities. Insurers expect businesses to maintain proper cybersecurity practices, including regularly updating and patching software to prevent attacks. If a company fails to patch known vulnerabilities, it may not be covered for losses resulting from those vulnerabilities being exploited. Coverage for restoring data, losses caused by employee cybercrime, and losses due to natural disasters are typically addressed within the policy's terms and conditions, though specific coverage can vary. Question 14. Which of the following is typically covered under a business interruption coverage in a cyber insurance policy? A. Costs of restoring a company's website after a cyber attack. B. Lost revenue due to a website being offline as a result of a cyber attack. C. Legal defense costs for defending against a third-party lawsuit. D. Payment for a cyber extortion ransom. Answer. B. Lost revenue due to a website being offline as a result of a cyber attack. Explanation: business interruption coverage in a cyber insurance policy is designed to compensate a business for lost income due to a cyber event, such as a website going offline due to a cyber attack. This coverage helps mitigate the financial impact of downtime and operational disruption caused by cyber incidents. It does not typically cover costs related to restoring a website or legal defense costs, of those would fall under other coverage categories. Similarly, ransom payments would be addressed under cyber extortion coverage. Question 15. Which of the following is a factor that would likely influence the cost of a company's cyber insurance premium? A. The company's industry sector and exposure to cyber threats. B. The amount of physical property the company owns. C. The company's employee retention rate. D. The geographic location of the company's office. Answer A. The company's industry sector and exposure to cyber threats. Explanation: the cost of a company's cyber insurance premium is influenced primarily by the company's industry sector and its exposure to cyber threats. High-risk industries like healthcare, finance, and retail may face higher premiums due to the sensitivity of the data they handle and their susceptibility to cyber attacks. Other factors, such as the company's cybersecurity measures and loss history, are also taken into account. The company's physical property, employee retention, and office location are not typically significant factors in determining cyber insurance premiums. Question 16. Which of the following cyber insurance policy provisions provides coverage for the costs of responding to regulatory inquiries following a data breach? A. Privacy liability coverage. B. Network security liability coverage. C. Regulatory fines and penalties coverage. D. Data breach notification coverage. Answer A. Privacy liability coverage. Explanation: privacy liability coverage typically provides protection for costs associated with regulatory inquiries following a data breach, including the costs of defending against potential fines and penalties imposed by regulatory bodies. This coverage may also include legal fees for navigating compliance requirements, especially for industries governed by strict data protection regulations. E.g., healthcare, finance. Network security liability covers security failures, while data breach notification coverage handles the cost of notifying affected parties. Regulatory fines and penalties are not generally covered, as most policies exclude them unless specifically included under privacy liability. Question 17. What is the primary purpose of conducting a cyber risk assessment for a business seeking cyber insurance? A. To determine the company's potential premiums based on risk exposure. B. To identify potential areas of the business where a cyber attack could occur. C. To increase the company's premium based on the findings of the assessment. D. To define the cybersecurity measures needed to avoid a policy claim. Answer B. To identify potential areas of the business where a cyber attack could occur. Explanation: the primary purpose of a cyber risk assessment is to identify vulnerabilities and potential areas where a cyber attack could occur. This allows businesses to understand their risk exposure and implement appropriate cybersecurity measures to reduce the likelihood of a breach. While the assessment can impact premium pricing based on risk factors, its main objective is to help the business address vulnerabilities, not to increase premiums. The assessment also helps businesses understand their risk landscape so they can mitigate and manage those risks proactively. Question 18. Which of the following is a typical benefit of cyber insurance for a small business with limited cybersecurity resources? A. Free cybersecurity training for employees. B. Automatic patching and updates for all business software. C. Access to a 24/7 cybersecurity help desk for incident response. D. Complete immunity from all cyber risks. Answer C. Access to a 24/7 cybersecurity help desk for incident response. Explanation: for small businesses with limited cybersecurity resources, many cyber insurance policies offer access to a 24/7 help desk or incident response team that can assist with immediate threats or breaches. This helps the business react quickly and mitigate damages. While free training or automatic patching might be available as part of certain cybersecurity services, cyber insurance typically does not provide these as standard benefits. Cyber insurance provides financial protection, not immunity from all cyber risks. Question 19. Which of the following best describes cyber liability insurance? A. A policy that covers both the financial losses and legal liabilities resulting from a cyber event. B. A policy that only covers physical property damage caused by cyber incidents. C. A policy that covers the cost of replacing lost or stolen physical devices. D. A policy that reimburses a company for the cost of implementing cybersecurity measures. Answer A. A policy that covers both the financial losses and legal liabilities resulting from a cyber event. Explanation: cyber liability insurance provides coverage for both financial losses and legal liabilities resulting from a cyber event, such as data breaches, ransomware attacks, or hacking incidents. It typically covers costs like legal defense fees, regulatory fines, data breach notification expenses, and business interruption losses. It does not focus on physical property damage, nor does it reimburse for the cost of cybersecurity implementations, though those might be covered under other types of policies or risk management programs. Question 20. Which of the following is the most common first step in recovering from a ransomware attack covered by cyber insurance? A. Paying the ransom to the cyber criminals immediately. B. Restoring data from backups and implementing cybersecurity fixes. C. Contacting law enforcement to investigate the attack. D. Publicly disclosing the attack to customers and the press. Answer B. Restoring data from backups and implementing cybersecurity fixes. Explanation: the most common first step in recovering from a ransomware attack covered by cyber insurance is restoring data from backups and implementing cybersecurity fixes. The goal is to recover essential data without paying the ransom while ensuring that systems are secured to prevent further damage. Paying the ransom is not a recommended first step and is often discouraged, especially since it may not guarantee recovery. Law enforcement and public disclosure follow later in the recovery process, depending on the situation and regulatory requirements. Question 21. Which of the following would likely be covered under cyber insurance policies? Network security liability coverage. A. Costs for notifying affected individuals about a data breach. B. Costs to restore a business's network after a denial of service (DOS) attack. C. Legal fees associated with defending against a class action lawsuit for data privacy violations. D. Lost income due to a business being temporarily unable to operate following a cyber event. Answer B. Costs to restore a business's network after a denial of service (DOS) attack. Explanation: network security liability coverage typically covers incidents related to breaches of the network security, including restoring services after a denial of service (DOS) attack. It focuses on the costs associated with securing the network and defending against incidents where the business's network infrastructure is compromised, while the other options, notification costs, legal defense, and lost income, might be covered under other parts of the policy. They are not directly associated with network security liability. Question 22. Which of the following statements about cyber insurance policy exclusions is most accurate? A. Cyber insurance policies always cover costs related to cyber attacks originating from insider threats. B. Cyber insurance policies typically exclude coverage for financial losses due to unencrypted data being stolen. C. Cyber insurance policies usually exclude coverage for attacks related to unpatched software vulnerabilities if the business has not performed regular patching. D. Cyber insurance policies rarely exclude coverage for data breaches involving third-party vendors. Answer C. Cyber insurance policies usually exclude coverage for attacks related to unpatched software vulnerabilities if the business has not performed regular patching. Explanation: cyber insurance policies often include exclusions for attacks that result from known vulnerabilities that could have been mitigated through regular patching and software updates. Insurers expect businesses to take necessary cybersecurity precautions, such as patching known vulnerabilities, and may exclude coverage if these steps are neglected. While some policies might include limited coverage for insider threats, unencrypted data theft, and third-party vendor breaches, exclusions related to unpatched vulnerabilities are common. Question 23. Which of the following is typically covered by data breach notification coverage in a cyber insurance policy? A. Cost of providing identity theft protection services to affected individuals. B. Ransom payments to cyber criminals demanding payment for stolen data. C. Penalties for failing to comply with government data protection regulations. D. Costs of replacing damaged equipment following a cyber attack. Answer A. Cost of providing identity theft protection services to affected individuals. Explanation: Data breach notification coverage typically covers the costs associated with notifying affected individuals about a data breach, including providing services such as identity theft protection or credit monitoring. These services help mitigate the risks faced by affected individuals whose personal data may have been exposed. The other options, such as ransom payments, penalties, and equipment replacement, fall under other types of coverage within a cyber insurance policy. Question 24. In the event of a cyber attack that results in a data breach, which of the following is most likely to be covered under a third-party liability coverage provision? A. The costs of restoring the breached data and systems. B. Legal fees for defending against a lawsuit from a customer whose data was compromised. C. The costs of notifying all affected individuals about the breach. D. The costs of paying a ransom to cyber criminals. Answer. B. Legal fees for defending against a lawsuit from a customer whose data was compromised. Explanation. Third-party liability coverage typically covers the costs of defending the business against lawsuits filed by third parties, such as customers whose data was compromised in a breach. It also covers settlement costs and damages awarded in the lawsuit. While other expenses like restoring data, notification costs, and ransom payments may be covered under different provisions of the policy, third-party liability specifically addresses legal claims from external parties. Question 25. Which of the following would most likely result in a lower cyber insurance premium for a business? A. The business has a history of frequent data breaches or cyber incidents. B. The business regularly conducts security assessments and implements cybersecurity measures. C. The business operates in a high-risk industry such as finance or healthcare. D. The business does not have any cybersecurity policies or protocols in place. Answer. B. The business regularly conducts security assessments and implements cybersecurity measures. Explanation. Cyber insurance premiums are often low for businesses that have strong cybersecurity practices in place. Regular security assessments, vulnerability testing, and the implementation of cybersecurity protocols help demonstrate the business's commitment to managing cyber risks. Insurers offer low premiums to businesses that reduce their exposure to cyber incidents. Businesses with a history of breaches, those in high-risk industries, or those without cybersecurity measures in place may face higher premiums. Question 26. What is the primary function of incident response coverage in a cyber insurance policy? A. To cover the costs of recovering lost data after a cyber attack. B. To provide a legal defense against claims resulting from a data breach. C. To fund the immediate steps needed to respond to and mitigate the effects of a cyber attack. D. To reimburse the company for the costs of upgrading its cybersecurity infrastructure. Answer. C. To fund the immediate steps needed to respond to and mitigate the effects of a cyber attack. Explanation. Incident response coverage is designed to help businesses manage the immediate aftermath of a cyber attack. This includes covering costs for hiring experts to contain the attack, assess the damage, and implement mitigation strategies. The goal is to reduce the impact of the attack and stop it from spreading further. While recovery and legal defense might be covered under other provisions of the policy, incident response specifically addresses the steps taken in the immediate aftermath of a breach or attack. Question 27. Which of the following is the primary reason businesses are increasingly purchasing cyber insurance? A. Cyber insurance guarantees protection from all types of cyber risks. B. Cyber insurance helps businesses comply with all local and international data privacy laws. C. Cyber insurance provides financial protection against the significant costs of cyber attacks. D. Cyber insurance helps businesses recover from a data breach without legal consequences. Answer. C. Cyber insurance provides financial protection against the significant costs of cyber attacks. Explanation. The primary reason businesses purchase cyber insurance is to mitigate the financial impact of cyber attacks. These incidents can result in significant costs, including legal fees, fines, and expenses related to data recovery and breach notifications. Cyber insurance helps businesses cover these costs and manage the financial risks associated with cyber incidents. It does not guarantee complete protection from all cyber risks, nor does it eliminate legal consequences or ensure compliance with data privacy laws. Question 20. Which of the following is most likely to be considered a first-party loss in a cyber insurance policy? A. A lawsuit filed by a customer after a data breach. B. A ransom payment to cyber criminals in a ransomware attack. C. Legal defense fees for a third-party claim resulting from a breach. D. Regulatory fines imposed by government authorities for data privacy violations. Answer B. A ransom payment to cyber criminals in a ransomware attack. Explanation. First-party losses refer to losses directly incurred by the insured business, such as the costs associated with a ransomware attack, including ransom payments. These are costs the business faces as a direct result of the incident. Third-party losses, on the other hand, involve claims made by external parties, e.g., lawsuits, regulatory fines, due to the breach affecting them. Question 29. Which of the following would most likely trigger a privacy liability claim under cyber insurance policy? A. A business loses access to its online platform due to a cyber attack. B. A business fails to notify individuals within the required time frame after data breach. C. A business accidentally discloses sensitive personal data to unauthorized third parties. D. A business experiences a ransomware attack that locks critical systems. Answer C. A business accidentally discloses sensitive personal data to unauthorized third parties. Explanation. Privacy liability coverage under cyber insurance policy typically covers incidents where a business is held liable for breaches of privacy, such as accidentally disclosing sensitive personal data to unauthorized third parties. This coverage can address both legal costs and damages resulting from violations of privacy laws or contractual obligations related to personal data. Question 30. Which of the following describes a retroactive date in a cyber insurance policy? A. The date from which coverage will apply, excluding incidents that occurred before this date. B. The date the insurer begins offering discounts to a business with a strong cybersecurity posture. C. The last date on which a business can submit claims related to past cyber incidents. D. The date when the cyber insurance policy automatically renews each year. Answer A. The date from which coverage will apply, excluding incidents that occurred before this date. Explanation. A retroactive date in a cyber insurance policy refers to the point in time before which no coverage applies for incidents that occurred. Any incidents that occurred prior to the retroactive date will typically not be covered, even if the incident is discovered after the policy is purchased. This helps insurers manage risks and avoid covering incidents that predate the policy.